Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the S&P 500 for the trading session dated Thursday 14th of November. I'm recording this video 10 to 6 in the early evening New York time on the 14th New York time. At the daily chart level, we now have some good strong upwards movement, and I expect momentum should increase tomorrow and maybe also Monday as we see the middle of a third wave unfold. At 1826, minor wave 3 would reach 0.618, the length of minor wave 1. I'm using that ratio to calculate the target for a couple of reasons. Minor 2 is really shallow, and minor 1 is really obviously extended. So minor wave 3 may not be so extended, and this target fits with the higher target for intermediate wave 5 really nicely. At 1864, intermediate wave 5 in its entirety would reach equality in length with intermediate wave 1, and the third wave at intermediate degree is less than 1 point off 2.618, the length of the first wave. So if the fifth wave reaches equality with the first, that'll be a really typical Elliott relationship between those impulsive waves. Within minor wave 3, no second wave correction may move beyond the start of the first wave below 1746.20. At this stage, within minor 3, I expect we've had 1 and 2, and 3 is now breaching the upper edge of this parallel channel, which is drawn around the entirety of cycle wave B from its start at 666.79, the end of the credit crunch. Sometimes C waves overshoot those channels, although if we get a really big, strong overshoot of this channel, then the alternate bullish wave count really is going to start to make more sense. Let's have a look at what's happening on the hourly chart, where the start of minor 3 down here is this point down here. So far, within this third wave, we have an impulse for 1, a zigzag for 2, and the middle of the third wave is incomplete. Within it, we have minuet 1, and minuet 2 was a very shallow correction, a zigzag, early in Thursday's session. I was looking out for that. And so far we also have a continuing increase in upwards momentum. I expect we haven't reached the middle of this third wave yet, so I'm expecting tomorrow and probably Monday as well, momentum should continue to increase. There's some great ratios in this impulse here. The third wave is close to 1.618, the first and the fifth wave is really close to equality with the third, and the third and fifth waves were both extended. At this stage, within minuet wave 3, we have 1 and 2, maybe over here. This is a perfect little impulse. We could move it down 1 degree. This could only be micro wave 1, and we may yet have to see a second wave correction. If that's the case, it can't move beyond the start of the first wave below 1780.22. I would expect the middle of this third wave to very comfortably breach this acceleration channel. It's drawn from the start of 1 to the end of 2 with a copy on 1. Third waves usually strongly breach those channels, and once it's breached, I'll expect downwards movement to find support at the upper edge of that channel. At 1807, minute wave 3 will reach 1.618, the length of minute wave 1. That target still probably maybe 2 or possibly 3 days away. At the daily chart level, this is a bullish alternate that expects that from the low at 666.79, instead of a nearly complete zigzag up, we have 2 first and second waves. First and second wave at primary degree are complete, and within primary 3, the first wave is incomplete. The targets are the same because the wavelengths and ratios used to calculate them are the same, so this alternate at this stage does not diverge from the main wave count. For both of the wave counts, eventually we'll have a trend change and a big downwards movement. This bullish alternate expects the following second wave correction at intermediate degree to clearly breach the lower edge of this big blue channel, which is drawn around intermediate wave 1 using Elliott's first technique. When that channel is breached, then we'll have confirmation that the first wave would be over and the following second wave should be underway, but it should not breach the lower edge of the big maroon channel, which is drawn on both the daily charts on the monthly chart in the same way from the start of this whole movement at 666.79. If intermediate wave 2 were to breach the lower edge of that channel, then a lower degree second wave would be breaching the acceleration channel of a first and second wave 1 degree higher, which would give the wave count all the wrong look. At that stage, I would discard this alternate wave count. If we see price move above 1858.03, then at that stage for the main wave count, cycle wave B will be over 138% the length of cycle wave A. 138% is the maximum common length for a B wave within a flat correction, which is what the primary wave count sees as unfolding. Once you reach a B wave longer than that, the probability that that's what's happening reduces. So above this price point, I will swap over my wave counts. I would expect that we're in a long-term bull market to last quite a few more years because we're not towards the middle of it, and we'd have the strongest upwards movement, the middle of a big third wave yet to come. So we got some more upwards movement. We got that second wave correction I was looking out for early in the session. It's really brief and shallow. I expect it's over there though, and we've started towards the middle of a third wave. On the 5-minute chart, there's a lot of overlapping at the start of it. That could be a series of first and second waves overlapping, which would indicate quite a strong increase in upwards momentum tomorrow and probably Monday as well. That's all for me today with your S&P analysis, and I hope that all our members are looking forward to a fabulous weekend.